and welcome to Nirmal, ladies and gentlemen. I'm Hiral Dadia. We have with us Kunal, Shah, Head of Commodities Research, joining in. Kunal, it's been volatile days of trade that we have been witnessing right now, especially if we see with what's happening in terms of crude. In overnight session, we did see a major slump that did come in. What are the reasons that you're picking up that we are seeing this kind of a downtick once again?
I think there are two, three development which has taken place since the last time we spoke. The most important one is the intensifying rift between US and China. So China, as everyone must be aware, is trying to put the certain law on Hong Kong, and that is considered as anti-social law, and that is what is causing United States to put another round of sanction. So today evening, Trump may sign on that bill. So that will again, intensify the US and China trade drift, which has been soothing so far. And I think that is the reason why all the commodity prices, especially the industrial metals and the industrial commodities, are under pressure. So I don't know whether he's going to sign today or not. But the fact is, it is on the Mr. Donald Trump's table. So he may sign that bill, which will allow US to put more sanction on China. And if that happens, then obviously it is going to be sentimentally negative for crude oil. And already crude oil, we've seen a humongous run up. We've seen prices moving up from 1,000 to 2,600. But the fact remains is that now for year prices to move up, we need a significant improvement in demand, which is not going to come immediately. And the supply side is still weak. So it's not going to get any further weaker from present level. So with the surplus of 8 million barrels per day, all the positive factors are priced in. Sell the rallies, 2,500 good levels to go short in crude oil, 2,400, 2,380 are something you can see. And on the up move, for the traders perspective, we are expecting 25, 30, 40 should be the stop loss for the June contract.
Right. But with this, another data point, Kunal, that I picked up is with regards to where the API inventory numbers go. Now, the numbers that have come out with regards to where API inventory goes, that is something which was unexpected by themselves as well. What is the impact of that? Because overall, inventory of almost around 8.7 million barrels is what they've seen for week ended the 22nd of March, whereas the prediction was around 2.5 million barrels.
Yeah, so that is the AP inventory. The official EI inventory will be released today along with the natural gas. And in that, I'm expecting another build. So this week, after inventory, we may see crude oil may edge lower. And I'm expecting that 2,500. So do not go short. We have a buy call running right now. So 2,500, 2,510, these are the levels where I recommend to go short. 25, 40, 50 should be the stop loss. And 2,400, again, we shall see after the inventory. Please trade with the strict stop loss.
Right. And apart from that, overall, another question I want to take with you is with regards to where bullion goes. Now, what's the sense that you're picking up on gold as well? In fact, yesterday when I was having a conversation with Mark Mobius as well, he's been absolutely bullish in terms of gold, clearly saying that 10% of your investments should be, in terms of where gold goes. Now, taking this into consideration, he's expecting gold prices to inch higher from here. Any strategy on that front?
Yeah, we are bullish on gold, but we have been constantly mentioning on our shows that for the short term, it's not going to rally. So the view what the other experts are having also, it is for the long term. Here we are discussing the trading strategy. So one should not just, one should tell the client that the long-term view of gold is positive, not immediate short term. We are not going to see a sharp run up in the short term. Today evening session, we can see gold edging up towards levels of 46,850 to 900. Not very bullish in near term, just because of this expectation of that Trump may sign on that bill. So that can lead to some upside, but I'm not expecting any sharp upside in near term. On a longer term, I'm very bullish on gold.
Right. And, earlier we had spoken about even cotton is something that you were positive on. Do you think from here on you could expect a further upside that could continue in terms of cotton futures if you have to look at the June contract?
Yeah, so the prices have moved up, and we believe that this rally can continue for a while because from 20,000 to 15,000, we've seen we are expecting some bit of upside, and I'm still expecting another 2 to 3% upside in this week. So still pretty bullish on cotton.
Right. And any other commodities that you would want to recommend?
Well, I feel that copper, we've seen good run up, and around 413, 414, good levels for the June contract to go short, and expect prices to go down and test levels of 408. And my main focus is on the US-China trade drift. So now, apart from the fundamentals and the economy is opening down after the lockdown, this US-China trade war seems to be intensifying, and that can lead to some more downside in copper. Copper is already up by 70 rupees from the low what we saw in the month of March. So in a trade war scenario, copper should not edge higher. So you can go short in copper.
Right. So that's a strategy coming in with regards to base metals as well. And very lastly, Kunal, a couple of weeks ago, we had spoken about NCDEX, AgriDex index as well, that has already started trading right now. What's the sense that you pick up in terms of their performance on that front goes?
Yeah, so from last 2 days, the volumes have been 20 crore, 25 crore on the, so it is picking up. So we gave the calls on the ongoing long,
Hmm.
and we got the targets were achieved. So we will keep giving calls. So this kind of product will not have a much deviation. We will not see 10% upside downside. So all the traders or the clients who are dealing in agriculture commodity, this is good option, and I recommend that this should be explored going forward. But the quantity, 1 lot, 2 lot, 3 lot, 4 lot, that kind of quantity we can start with, and the moment it get traction and the volume starts picking up, then I think we will be aggressive on the product.
Right. All right, Kunal. Pleasure speaking to you, and thank you for sharing that view as well. We will come back to you once again next week to understand more with regards to what's happening on this new index as well as what are the strategies one should be looking at. Thank you very much, everyone, for joining in.